On today's episode of the Cryptoverse. Here we are again with another rapid fire episode with 10 stories today. Let's get into it. First one. Any BlackBerry fans out there? Well, BlackBerry is introducing a blockchain-based healthcare platform. I got this story from the Cointelegraph. Here it is. BlackBerry introduces blockchain-backed platform focused on healthcare services. So, leveraging the BlackBerry reputation for data security, they're going to partner with this organization called OneBio. They're going to develop a system designed to store and share medical data that has been anonymized. So it won't be personally identifiable. That's kind of what anonymized means, right? So anyway, this Cointelegraph article, it states that BlackBerry reached an all-time high of 50% in terms of market share penetration for their smartphone devices, and they bottomed out in 2016 at less than 0.1% market share. That's a catastrophic loss. But I mean, nice to see them using the BlackBerry brand for other things rather than pushing smartphones. However, speaking of BlackBerry smartphones, the new BlackBerry Evolve device is set for release on the 10th of October, if you're interested. And no, it does not have the classic BlackBerry physical keyboard, which is unfortunate, but that's just the way it is. Next story, we've just passed the 1-year anniversary of Bitcoin SegWit technology. So check this out. This is from the Crypto Globe, and I've also verified that on some graphs, which I'll show you in just a second. So if you weren't around when this happened, SegWit was an upgrade to the Bitcoin main network, and it was discussed and highly anticipated for years beforehand, and it was finally activated last year. Now, because SegWit was a soft fork, it means that both SegWit and non-SegWit transactions can be done on the same network without causing any problems. So that allows time for wallets, exchanges, nodes, and miners to upgrade their systems in their own time without any hard deadline. It's nice. So looking at the current data, which I'll now show you, here it is. This is coming from transactionfee.info. As of yesterday, the 4th of October, we managed to reach 45%. So that means 45% of Bitcoin transactions yesterday were using the SegWit technology in the address format and the transaction format, which also means that the other 55% were still using the old legacy format. So whoever was broadcasting those transactions, wallets, exchanges, and so on, is still, after a year, have not upgraded to the SegWit software technology. So this is how software fork upgrades work, right? They are much slower than a hard fork, which sets a hard deadline when you must upgrade by. However, soft forks do carry a much lower risk of splitting the network in two, which is what happens if you imposed a hard deadline. The people who didn't upgrade by then would be split off onto their own network, the legacy network, and then the SegWit network would be, on its own. That hasn't happened because of the soft fork, and it still gives people time to upgrade, and it's gradually happening very, very slowly. So there we go. Next story. Crypto prediction market Augur, based on Ethereum, is gearing up for its first major upgrade after its official launch. So this came from CoinDesk. Here it is. Crypto prediction market Augur is gearing up for its first major upgrade. An article by David Floyd. So Augur was one of the first major crypto projects from a few years ago, and it was finally launched in July of 2018. I remember studying Augur right when I first got into cryptocurrencies in like 2012, 2013, and it was always like in the top 10 by market cap and so on. It was one of the only major projects back then that was worth talking about. Anyway, peaking at 300 daily users, it's now down to 100 daily users. That's terrible. Like, that's not an active app for the size of the ICO and all the rest of it. So this is largely down to user experience, according to this article. That's half fair, in my opinion. I've used the Augur app a little bit, or I've attempted to anyway. I used it when it was web-based, but now it's gone to the software app. I haven't been able to get it to work. The other thing, in my view, that's causing the lack of adoption is the Ethereum network being largely at its maximum capacity, and subsequently that causing higher transaction fees just compounds the problem. So like I just said, I've made several attempts to play around with the current version of Augur, but each time I've failed to actually get it to sync with the network. Now I say that, I'm now in the process of syncing my Augur app again, given there was an update to the app, that appeared right when I was writing today's episode. So right now my Augur app is syncing to the latest version, and God willing, it will work this time. So let's see. One major change to the new version 2 of Augur, one of the things that got my attention anyway, was the introduction of the DAI stablecoin. This is a critical upgrade because what you don't want to do is lock up your Ethereum or your rep tokens or whatever in a prediction market for weeks or months when the price is fluctuating. That's not good, is it? So the DAI stablecoin will allow to price the prediction markets in dollars. Sweet. That will make it much simpler for people to understand and much less risky to participate in the markets, right? So if you hold Augur tokens, important, you will be required to go through a manual process to migrate your tokens from the current version of the smart contract to the new ones when it's deployed, okay? So here's a Medium post from Augur themselves, which talks more about this. I searched around this article and I was looking for a time scale as to when they might be launching this version 2, and I actually found in this blog post of their own, Augur themselves state there is no expected timeline for version 2. But I figured this story was worth talking about anyway, in case you might be losing faith in your Augur investment. Well, this might give you a glimmer of hope as to where it's going. So, hodl on or sell. Entirely up to you. I'm just giving you the information. Next story. Abra have a new token that is going to make it easier to diversify your cryptocurrency investments via an index fund. I found this on nulltransaction.com. Abra's new token makes diversified crypto investing a breeze. So basically, through the Abra app, you purchase this token, and then the money is spread across the top 10 cryptocurrencies and then rebalanced every month. Simple as that. However, this isn't necessarily the top 10 cryptocurrencies by market cap according to CoinMarketCap. Abra is using the Bitwise 10 Crypto Index Fund, which supports Bitcoin, Ethereum, XRP, Stellar, EOS, Dash, Monero, Zcash, LiteCoin, and Bitcoin Cash. So this mechanism of pooling money and then splitting it across various assets, it's technically similar to how an ETF works. However, the ET in ETF stands for exchange traded, when really that should be regulated exchange traded. So that's why Abra can't really call it an ETF, because that means the fund, the ETF, the exchange traded fund, is trading on a regulated exchange. So that's why they can't call it that. The product has to be traded on those regulated financial exchanges. Crypto still isn't regulated. Neither is Bitwise 10 apparently, and neither is Abra. So that's why it has to remain calling it an index fund rather than an actual ETF. That would get them into trouble. Next story. The UK Land Registry is beginning a new phase of its blockchain research project to move land titles and transactions onto the blockchain. This comes from CoinDesk. So, yeah. You probably already know this, but the process of buying and selling real estate, it's still so unbelievably slow as a process that blockchain technology is a brilliant solution to a huge problem. So the UK Land Registry is going to develop their own blockchain platform thingy using the R3 Corda software technology system. So Corda is this open source toolkit platform where you can launch your own blockchain using open source software. The downside to this story is that the UK Land Registry are going to develop their own private blockchain. The upside is they're using Corda, which is a open source platform. So that's something. Next story. What if Ethereum doesn't switch its core consensus algorithm from proof of work to proof of stake? We haven't really considered that, have we? So this is another CoinDesk article right here. It says, a multi-million-dollar bet on Ethereum's proof of stake, betting that it isn't coming. So what does this mean? I mentioned this in the upcoming Ethereum hard fork that we talked about actually yesterday and this week. So this upcoming hard fork is a step of preparation for Ethereum's move to proof of stake consensus, which will massively increase the processing capacity of the Ethereum network, which is causing all manner of problems right now for all the apps that are built on it and continue to be deployed, right? So many of us talk about this move to proof of stake as a foregone conclusion. And it's such a huge change to the Ethereum network. There is a possibility it might not happen at all. I hadn't considered that. I was just, tunneling into the possibility that it was happening. Like there's a conclusion, not necessarily the case. So this lady called Chen Min, who designs ASIC mining hardware, she's so far invested $4 million in developing ASIC miners for Ethereum, which is crazy if Ethereum moves to proof of stake, right? If Ethereum does move to proof of stake, the entire market for Ethereum mining hardware disappears because it's no longer required, because it's no longer be using mining hardware, right? So this lady, Chen, is placing a risky bet that it's not going to happen. So just to be clear, she's developing high-performance Ethereum mining hardware to sell as a product, right? So that other people can mine Ethereum. There is no mention here of her building her own mining farm, although that always remains a possibility. It's what Bitmain do, right? It's what Bitfury do. If Ethereum does move to proof of stake, Chen says, she'll just change her focus and start selling her hardware to Ethereum Classic miners, which is still proof of work. So not that big a risk when you look at it like that, is it? Next story. A fourth court case has just been concluded that in the USA, cryptocurrencies are classed as commodities. Ooh, big news. So this was reported by Bitcoin.com. Fourth court case confirms cryptocurrencies are commodities in the US. So that means it's the responsibility for regulation. It falls under the jurisdiction of the CFTC, or the Commodity Futures Trading Commission. The CFTC is chaired by our old friend, chrisjsconey. So this latest case concerns My Bitcoin and whether their conduct was fraudulent or not. So this ruling means the CFTC can now pursue the matter against the coin issuer because My Bitcoin is considered a commodity. So on the one hand, this will slow down innovation because small startups will now have a lot of fear of falling foul of the law, their coin being classed as a commodity, and then that's a whole can of worms. Other companies will have to incur the administrative and legal and accounting expenses of getting professional advice on that so they don't fall foul of the law. On the plus side, though, the level of clarity about exactly where coins stand legally and illegally, the clarity is increasing in that regard. So that should give companies who go through the process of becoming compliant confidence to move forward and develop their businesses. So that's a positive. Next story. According to survey data from Fundstrat, 54% of institutional players think Bitcoin has hit the bottom. Good news. So this comes from Cointelegraph. There it is. So Fundstrat did a survey to institutional investors and also on Twitter and whatnot. But basically, this sounds like good news to me because I say that, but as long as institutional investors make up the lion's share of trading volume, otherwise this matters not, does it? So according to Bloomberg, this is the case. Institutional investors do account for the vast majority of trading, especially when it comes to Bitcoin trades over $100,000. Of course, that sort of stuff goes over the counter, so you get a fixed price and you don't move the markets too much, right? So there's a ton of over the market volume still going backwards and forwards, even in these market conditions. We just don't see that because it's private under the table. Well, they call it over the counter. I always say under the table because you can't see it, right? It's all just high net worth individuals passing hundreds of millions of dollars of Bitcoin backwards and forwards at fixed prices, which we don't have access to those markets. Neither do we even have the access to the data from those markets. But anyway, the outcome of this Fundstrat survey is that institutional players think Bitcoin has hit bottom. That probably means they've all gathered all of their Bitcoin at rock bottom prices and now want the market to go up. Next story. YouTube stars lose 1,500 EOS after downloading a malicious wallet from, I think it's the Android App Store. I found this out on cryptoglobe.com. Here it is. YouTube stars lose 1,500 EOS after downloading malicious wallet app. So this is the Hodge twins. I've actually watched some of their videos. They have 4 million subscribers and became famous for their comedy and fitness videos, but like many others, have jumped on the crypto bandwagon without having a clue what they're doing and losing $8,500 worth of EOS as a result. So they downloaded something called the EOS.io Wallet Explorer, and they say then several transactions that they did not authorize removed a total of 1,500 EOS. Now back to the article here because it concludes something very interesting. I've highlighted it here in red. You see here it says, this should serve as a reminder to be extremely careful about any third-party apps that you download to handle your crypto, as both Google Play and the iPhone App Store have been criticized for not thoroughly verifying all the content that is offered through their app platforms. But I would also say, more important than that, is to be extremely careful where you get your cryptocurrency information from. I mean, how can you take the Hodge twins seriously as crypto content creators when they make a bumbling error like this? What the hell are they doing importing a private key that controls 1500 EOS into a software app they haven't tested? That's such a fundamental error, it completely betrays their understanding or lack of understanding of how cryptocurrencies work, and lack security is just unforgivable. So I would say preferably get your cryptocurrency information from someone who has a computer science degree, who has run businesses on the internet or internet technology since 2005, and who has never lost any cryptocurrency, either from a hack, a social engineering attack, or even by personal mistake. That's me, by the way. Next story. Venezuela's Petrol Whitepaper blatantly copied from Dash, according to an Ethereum core developer. So here's another story that came from the Cointelegraph. Venezuelan Petrol Whitepaper blatantly copied from Dash, according to Ethereum developer. So we spoke about the updated Petrol yesterday even. Well, here's more on that story. So according to Ethereum core developer Joey Zhao, allow me to quote his tweet here, which is the evidence. He says here, LOL, Venezuela's new Petrol token is a blatant Dash clone. Well, at least the white paper on page 11 anyway. And then he links to the Petrol white paper and Dash's GitHub that shows the similarities. Well, there are several spooky similarities between Dash and the new Petrol, including a masternode infrastructure, the X11 mining algorithm, which Dash also uses, and an instant send feature, which is also a Dash feature. To me, there is no surprise to this, given that Venezuela is the second largest market for Dash, and that around 100 new merchants every week start accepting Dash's cryptocurrency to help them get around the national currency of Venezuela hyperinflating. So President Maduro has no doubt spotted this, Dash running big conferences selling out in Venezuela, several of which they've done already. President Maduro has obviously spotted that, found some currency competition, and once he's become aware of that, decided to pull a classic, what I would call a Chinese knockoff strategy, which in my opinion also will ultimately fail. But there we go. That's all I've got for you today. So if you like this episode, hit the like button, hit the dislike button, subscribe, leave a comment, and now I'm going to cut to a clip which will show you how you can get paid cryptocurrency tips for watching the Cryptoverse without ads. Check this out. So here's how you get paid for watching ad-free versions of the Cryptoverse. One of the benefits of signing up as a patron for just a few dollars a month is you get a free Steam account. See there, it says free Steam account included with this package. Now Steam is a cryptocurrency-based social network, and that means whenever you comment on one of my videos, that gives me the opportunity to tip you in crypto. Yes, you heard that right. I'm offering to pay you in crypto to watch my show, and I'm about to demonstrate that to you in real time. So here's how it works. After I publish a new video, I go ahead and read the comments from the previous day's episode. So let me go ahead and do that now. I'll click on the comments here. There's been 5 comments from yesterday's episode. I'll find a good comment, read through them all, and then normally I'll just like it like this. Normally on a social network, when you like something, that's where it ends. But it's different on Steam. You'll see that there's actually a monetary value to my like. And the size of the tip depends on who hit the like button. And since I've been building up my account on Steam since May of 2016, I've got a lot of voting power, meaning when I like a comment like I just did then, it generates a tip of 86 cents. And if you want to, you can even convert your tips into Bitcoin using a service like Block Trades. And think about it. If I tipped you 86 cents per day, that works out at over $25 per month. So when you compare that to how much it costs you to be a patron, you're probably going to end up making money overall. So that's basically it. Go ahead, sign up as a patron, I'll create your Steam account for you, and then you can start getting tipped.